Let's switch gears to the hedge fund industry. We've seen a whole host of winners and losers announced as we get deeper into 2020. D.E. Shaw and Brevin Howard among the winners. But what does it mean to win?
It don't look so bad, does it?
All right. Well, tell us how good it is.
For D.E. Shaw, their composite fund, which has been closed to new investors, is up more than 10%. That's beating the hedge fund average around 8%. Obviously, we know the S&P was up more than 32%. But these days, investors are happy if they see a double-digit return. And that's what the composite fund has done for them for 7 out of the last 8 years.
I actually thought, interestingly, the most interesting hedge fund story today was the Rokos Capital, because they increased their payouts to their members by 51%.
And remember, they only started trading their first full year in 2016, initial seed capital from Blackstone. Yes, they've been doing very well. And back over to Brevin Howard, where Chris Rokos had come from, Brevin Howard also had a pretty decent year with about an 8.4% return, building off a record year since the financial crisis last year. And remember what's happening there. Alan Howard had given up his CEO spot to focus on trading more. So hopefully we'll see some of those gains keep on flooding through this year.
Do we have a sense of whether this performance is good enough to staunch the bleeding in terms of flows?
So at Bloomberg Intelligence, they put out a note this morning saying just that. Actually, they believe that the assets are rising enough to offset some of the outflows so that we should start 2020 on a good footing. Not to mention, fine, more hedge funds are closing than starting, but the ones that are starting are raising record amounts of money. Remember when Louis Bacon had started, it was just 25,000. Now people are starting with $2 billion at a time. So putting that into perspective a little bit is remembering that the industry is bleeding but not dead.